To the Hurley Investments trade bindings and adjustments for Thursday, the 6th of June. Type something in if you guys can hear me. Always feel comfortable knowing that you guys are able to hear what I'm saying. Makes me feel better. Thank you, thank you, thank you. Okay, we are going to work on a couple ideas. And basically, I'm just going to go through my thought process right now for this year. This year meaning for this year for summer. What I'm looking to do and where my thoughts are coming from. We have the week-long Worldwide Developers Conference. It's not the WWCC, it's WWDC, the Worldwide Developers Conference. This is what's moving Apple higher. If we are looking for a trade today, I have to get the T to work. To place a trade would be a June 28th, 2024 covered call on Apple. $200 strike price for $2.80 credit. That's where I would be looking to find an opportunity to put money to work. It would be a long time trade. It would be, hey, we want to run up. We want to get paid. We want to see Apple get to 203. We might let it run up and then exit it. But that would be where I would be looking to place a trade. So don't be surprised today or tomorrow to see Apple with a $200 covered call. Could Apple run higher than 200? Yes, it could. But 203, it's fully valued. With $2.80 of credit, we're pretty close. It gives us an opportunity to exit Apple. Why would we want to exit Apple? And that's the next question, right? Why would we want to exit Apple? Fully valued at 203. And yes, it could go up to 212. No new products. And Google L is doing so much better than Apple and stock price appreciation. They're better opportunities. They're much better opportunities there than what Apple is bringing to the table. Well, Kevin, it's Apple. It's now the third biggest company because NVIDIA passed above them or something like that, right? I know, I get it. They've got $1 billion of buybacks. I know, I get it. But they're just not moving. They're not innovating. The return on Google has been 100% in the last year. We haven't had 100% return on Apple. In fact, Apple is the weakest of the Mag 7 companies that are out there. So as hard or painful as it is, don't be married to any one particular stock. Next comment I'm getting left and right. What if it keeps going up? It might do that. I could be wrong. Apple, after 10 years of sucking after the Worldwide Developers Conference, might take off. And someone just typed in, profits are good, so why not take them and get in later when the market falls? Great comment. That's the thought process. The thought process is, hey, we're in a very indecisive time through the summer doldrums with an election coming up, with one of the candidates going through a kangaroo court system. The indecision is ridiculous because the volatility and the pieces that make up our market right now are not making sense. This is a simple no-brainer. This is a, hey, let's get this done. Might be today, might be tomorrow. We're kind of looking at the last hour. But typically, Apple runs into the Worldwide Developers Conference. They don't put anything out that's new and nice, and they fall afterwards. Obviously, we would collar them, and we're talking a full collar trade. Earnings, we're looking at probably putting on a 190 long put and maybe a 205 covered call. Again, trying to get out of Apple relatively quickly during this summer. So that's where we're looking at and what's going on with Apple. That would be the trade I'd be looking to put on. Now, I'm going a little separate direction because I've got a couple questions or comments on Meta, but are all right. I don't know what I was trying to say here. Let's just put it as indecision, right? Indecision. It sucks. And if you're indecisive, that'd be your first red flag to not place a trade. Right now, there are so many uncertainties and or factors that might, not that can, that might affect our market, that putting new money to work is very, oh crap, come on, is very hard. That is the easiest way to say it. It is very hard because everything's fully valued. The market's fully valued. We still have wars. We still have China problems. We still have elections, oil. I can bring out so many different things that it makes me, it doesn't paralyze me, but the risk does not make sense to bring in new trades. It just doesn't. It just, none of what's coming up here is smart or helpful. And I have no idea what I just did to my thing there, so we're just going to move it like this. Okay, a couple of people have asked about Meta. And we're going to follow this a little bit farther along. At one point in time, the comment was made to me, hey, total cost basis is 20,000 on this one because there's 4. 3 would be 15,000. But someone made the comment to me, hey, shouldn't we take those profits? Shouldn't we take those profits? Isn't it time to be good to go? Isn't it time that we are profitable? Let's make some money, right? And at this time, we were upside down in our trade about $4,000. As time goes on, we're now only upside down in our trade 1,700. I wish to hell that this stupid system would work better. We're only down 1,700 right now. Yes, we could have gotten out with a profit of 11,000, not capturing the other 9,000 of that 20,000 that we have here. Today, we could get out of the trade on the short side with a $9,700 profit. We'd still be down overall in the trade. Getting pissed off. Damn things just don't ever work like you need them to. Give me a second, please. Obviously, I am not as smart as my computer. All right. Don't want it formatted. Just get it out of there. Well, I'm gonna have to figure it out. Short answer comes to this. A lot of people have asked, why have we not taken profits on the short side? Why are we not taking an $11,000 profit or a $9,700 profit? We could take it, we could add it back on later, was something Keeve said. And my comment to everyone is 11 grand would be good, $9,700 would be good, but 20,000, $20,118.47 would be better than 9,000, than 11,000. Why not take all of the $20,118 of profit? That is what I'm trying to get at. If we do nothing at all, we're going to get to keep all of that credit. Would it be nice to take a profit of $9,700 today? Of course. But if we did that, our long side is still losing. We are still down $1,740. And we no longer have anything making money to the downside. Well, Kevin, Meta is back up to $496. Great. That's wonderful. Where is it going to go tomorrow? Well, I don't know. You don't know. I don't know. If we're trading directionally, we have a 1 out of 3 chance or a 33% chance of being right. The beauty of this is if we have patience, we can capture $20,118.47. That is more than capturing 11,500. It's more than capturing 9,700. And it gives us protection if we are wrong. Sometimes the best trades in life are the ones that you don't screw up. Just let it go. Just let it go, and you're going to be in really, really good shape in the long run. And that's the problem. Some people, when it comes to the long run, there is no long run there's just no long run patience in the people. Be patient. Let things go for the long term. It's okay. Little bit of patience. That's all we have to do. Little bit of patience. It really doesn't matter. So don't let it matter. Little bit of patience. We're going to be good. It's just really, really hard to have that patience. Give it time. Give it time. That's all we're doing is just giving it time. All right. Any questions about that? Any questions that you guys have that I can answer for you? I know a couple of you are here going, hey, what about this? What about that? I was trying to get those answered for you. Investing is about patience, fighting greed. Correct. So someone just typed in, Bill, investing is about patience, fighting fear, and not being greedy. Just look at the numbers. Boy, that sounds like someone really smart. But yeah, the numbers need to talk to you. In fact, I really hope you guys go back and look at the commentary for the 6th Monday of this week. I finally found the numbers that justify the risk in a rate cut. We can't tender the debt that we need to support our country right now. So because of that, it's something that you definitely want to be paying attention to. Definitely go back and look at Monday night's commentary and how I'm going through the unfulfillment of treasuries that we're trying to sell. The rates have to go higher so people will continue to buy. It's we're kind of in a somewhat scary situation. All right, Abraham, Bill, Rich, that's it. My trade today would be a covered call on Apple. If you also were to work the numbers, 280 of credit on right now, an upside of $4.28. if you work those numbers, 280 plus $4.22. So $4.22. Man, this is really ticking me off. I don't know what I did. $4.22 plus $2.80 is $7.02 of total profit, divided by 193. We're looking at a 3.63% return in 3 weeks. Maximum profit is $7.02 if we purchased Apple right now and then put the covered call strike price on. So a 3.63% trade is what we're looking for. If you already own Apple, it's a process to get you out of the stock. All right, guys. Hey, appreciate you being here. I hope this was helpful. I hope this is giving you something to think about and to look at. We are trying to do our trade findings and adjustments to help you guys better see what we're looking for and start to follow some of the trades that we're working on ourselves. We're not looking to put this on till the last hour today, trying to see if Apple comes back a bit like the market has been doing. If not, maybe put it on tomorrow. So that's what we're looking on Apple. Any questions you guys have, don't hesitate to email info@Hurley Investments or khurley@hurleyinvestments.com, and we'll get those answered for you. Pleasure being with you guys today. Have a great day, and I'll look forward to seeing you Monday night. Bye-bye.